On that note, do you recommend that somebody who wants to get into real estate investing, do you recommend becoming an appraiser for a few years?
The value, so appraisal is a dying profession. Reason being, it's very tedious work. Like you guys just said, I don't really like appraisers, right? That's how everybody feels. Why do you not like appraisers? Well, because best case scenario, they appraise your property and the deal goes off without a hitch. You never see them again.
Yeah.
Worst case scenario, you're like, this appraiser just killed my deal.
Yeah.
So it's like how do you ever build rapport with
It's a
people?
neutral or a lose.
Right, exactly.
There's no win
It's
relationship.
like and so the pay has not kept up with inflation. So appraisers aren't making more money, to keep up with the cost of living and the cost of everything. That being said, the best reason to become an appraiser is the skill set of being able to recognize value and become like a ninja at that.
Yeah. You don't have a course on that, do you?
Do a course on
on appraisals?
No.
Dude, you could probably have like a course, like a simple 2-hour class. You just put together just how to evaluate a thing. Charge $49 for it. You'd make so much money, man. Dude, you should do that.
Yeah, it is a good thought.
Because
maybe we'll have here's the question. I'm going to ask you this question. Okay. Will you come and teach a class for an hour for the Better Life Tribe, which is all for charity anyway, to teach our members how to appraise a property?
Now that's a compelling, interesting thing right there. Yeah, that sounds more interesting.
Okay.
Yeah.
All right. We're going to make it happen.
Yeah.
Okay. What if, real quick, I'm going to go down a list real quick of what I look for and tell me yes or no. So, distance, quarter mile or closer?
Again, it depends.
It
depends. You want the closest. As an appraiser, you're looking for the best comparables available. So why does it depend? Well, take for instance, I appraised an NFL player's house in Dallas. This house was insane. It had a bowling alley, it had a swimming pool in the shape of a dolphin because the guy played for the Dolphins living in Dallas. I don't know. Had a bowling alley, had an arcade, had all this crazy stuff. Well, is there another house like that next door? No. It's like I might have to go all the way across Dallas to find the next house that's similar, So it depends. That being said, the average appraisal is like 1,200 square foot or 1,500 square foot, 3-bed, 2-bath with a 2-car garage, depending on what part of the country you're in. You just want the closest thing that's similar, right? So that's your answer. Always, if you have 2 properties that are the same square footage, same bed bath count, same year built, and they're right next to each other, that's a great comp, obviously. If they're in similar shape, if one's been updated and the other hasn't, you need to look for one that's similar to this subject. But just because 2 properties are close to each other doesn't mean that they're comparable to each other. Obviously, if you're in a developed neighborhood that was built by the same builder in 2007, those comps are going to be the most comparable to your property if they're there. But sometimes what you have in smaller markets like where I am, there'll be a house for sale pending, but there's no sales in the last 12 months in your neighborhood that are similar in size.
Yeah.
What do? Well, you got to go further out. You got to expand your parameters and find the most comparable sale available.
Yeah.
And that's where you get into having issues with appraisers, right? They got to put data in their report to support the value today, but there's no comps. So what do? You use the best comparable sales available. Well, then the buyer and seller get the report and they're like, I don't love these comps.
Yeah,
you're like, the appraiser doesn't either.
Yeah, the last issue I had, he pulled a house from 8 miles away.
Right.
Because it was the same school district.
Okay.
And I've never wanted to go to somebody's house more. And we contested it and everything and couldn't get it changed. So we had to take a $35,000 price reduction.
Oh, man.
Yeah.
Oh, that's rough.
It was not fun. Not fun at all. So would you suggest then to somebody that's just starting out to invest in areas where there's solid comps, the neighborhoods are the same, they're track homes where it's everything like you just said, 3-bed, 2-bath, 2-car garage. Is that where you would suggest somebody starting out at? Or would you suggest doing it if you were in a more of a rural market where you don't have great comps?
I mean, it's all a risk reward scenario analysis, right? Like if you're way out in a rural area, your risk is higher because there's not as many comps and you can't verify your comps as easily, right? So I would say, I am an appraiser, and that's not predominantly what I do. That's not where most of my income comes from. Most of my income comes from my investment portfolio, and I'm also a broker as well. But I'm an appraiser, and I've gotten burned by appraisal values. Like I've had people come in low on my deals.
Yeah.
Now I'm like, I think it's worth this. They come in low. But ultimately, the market will decide what something's worth, right? Like Like we did on a Burr deal, we had bought a deal for like 125. We put 25 in it. I knew it was worth 200. I was like, there's comps right next door. The guy came in at like 175. I was like, I called him and I was like, look, respectfully, I've got comps in the same neighborhood, similar in size, that say this is worth 200, and they're like 175. I was like, we'll see what happens when I sell it. Well, we put it up a couple months and it sold for 200. First day on the market, and I'm like, this guy just it was just a bad appraisal, you know, but.
What did he say in that case when you talked to him? Like, was he like, hey, listen, I know my data, and
yeah, he wouldn't have a conversation with me. He's like, you know, a lot of appraisers are old persnickety guys who just they're like lawyers but antisocial. Yeah, you know, they're like they're just going to defend to the death what they're saying. Yep. And so I'll answer your question by saying this. Like, margin of safety is your friend when it comes to what investment properties you should buy. So I'll say this, like, you can always protect yourself by having a wide margin of safety. You don't know what somebody's going to appraise something at, but if you've got $100,000 of equity on your deal and they come in 20 grand low, you still got 80, right?
Yeah.
But if you're doing really thin deals and you've got 15 grand of equity and they come in low, it might have just screwed you, you know? So I would say, like, margin of safety, like, you can't guarantee an appraisal value. It's just a part of the whole process. But if the market, like, this is another thing to think, to remember when you're doing appraisal, for appraisers especially, I think. This is like, there's hardly any appraisers listening in, because I don't think appraisers, like, try to learn how to become better investors. But for the appraisers out there, if there's 5 buyers all fighting over a property, all willing to pay the same above market price for something, that's telling you that property is worth that.
Yeah.
Right?
But appraisers don't do that. I mean, because
this appraiser does.
Do you do that?
Yes.
So, like, because we've had houses before where we've submitted 10 offers that are all well above what they come back, because they have appraisal writers or what, you know, that are all well above where they've appraised that. And we said, obviously the market has dictated that this is worth X,
right?
And you're appraising it at X. And then I think that they get, you know, at least in my experience, they get defensive. And they're like, no, this is it, and we'll try and contest it or something like that. And then we'll have to tell the buyer they got to go find a new lender because we can't work through their lender. Yep. And so, like, what do you do in that situation?
Well,
or do you just
so this has been a really challenging environment for appraisers because of exactly what you're saying. Like, fundamentally, the problem is not that the houses aren't worth. The problem is the inflation with the dollar. If the dollar is worth 8% less this year, and it's going to cost more money to build the properties, right? So the cost approach, that's the cost approach. That's going to become more expensive. Well, if you just don't have enough sales in the last year to support that this is now selling for more, it's because the dollar is worth less. So there's more dollars chasing the properties. So the appraisers got to understand that, like, what if inflation's 100% this year? Yeah. Well, now you got twice as many dollars chasing the same hard asset, which is real estate. So obviously that house has got to sell for twice as much just to keep up with the value of the dollar, right? Because the dollar's worth half as much. Yeah. Right? So the appraiser's got to reconcile, like, you know, we've had really high inflation over the last few years. We've also got a housing shortage in good markets. Yeah. So you've got high inflation, not enough houses. And then you've got buyers, like, and then you got this, like, interest rates that have been raised. So there's not people that don't want to sell. Yeah. So you don't have properties coming up for sale. You've got too few houses for sale that people can actually buy. So they're fighting over the properties when they go up for sale. Then you've got high inflation. So stuff's selling for higher than the comps show. So what do you do as an appraiser? Because it's like, well, the market says it's worth this. There's not enough houses. If I were to build the same house, it would cost more than X per square foot, which is, you know, more than it's actually selling for right now. It's a hard situation to appraise in.